and welcome to Money, 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 your weekly personal finance date with me, Surabhi Upadhyay. Now, it's that time of the year again when you rummage through your inbox for that Form 16, desperately trying to call your tax advisor, only to find his line perpetually busy. Yes, it's tax season, and the deadline to file your taxes is here. This episode of Money, Money, Money is for all those last-minute folks who are yet to complete the task. Well, we're here with the Money, Money, Money Simple Tax Filing Guide. My guest on the show today is PARIZAD SIRWALLA from KPMG and financial planning expert ROONGTA. Thank you so much, PARIZAD and Harsh, for joining in. So yes, this is a quick checklist sort of a show. So, what you need to do and what you need to avoid doing in order to file your taxes. So I thought, PARIZAD, maybe we can start with the basics.
Yeah.
First, knowing what all comes under income. Because as salaried individuals, we tend to think Form 16 salary, we're done. But that's not the case, right?
Right. So actually, income is a very inclusive definition, Surbhi. It depends on individual facts of the case. But yeah, broadly, the categorization of income largely falls under 3-4 buckets, which is typical for any taxpayer, which is your salary income. If you have property, then either your rentals or your, deemed to be let out property income. If you have investments and you realize gains, then capital gains, and then your other residual sources, which is your interest, savings bank interest, fixed deposit, and the likes. Broadly, and if you're earning, engage in business and profession, then there would also be the element of your professional or business income. Largely, these are the heads of income under which you can typically fit in.
So let's just quickly go over them in some more detail. So salary is fairly clear and it's simple.
Right.
But when you're talking about interest income, there is an element of deduction which the bank also does on your fixed deposits or on your savings bank account.
Correct.
So how do you know what is the residual amount and what your tax liability then is?
When you have elements of income like interest on fixed deposits or any other item, say your rent, which is subject to certain tax deduction at source payments, one has to factor in mind that the TDS rate could be 2%, 10% as the case may be. But your individual tax rate as an individual, you're supposed to be paying taxes on depending on the slab of income. So you may have some incremental catching up of taxes to be done when you're, annualizing your total income and not really rely only on the TDS that has been deducted.
So what's your experience, Harsh, when you were advising clients on preparing their IT return? What are the areas that people tend to miss out then? And specifically talking about the different types of income, how do you go about advising people particularly on property and the rental income aspects?
So I think two things. As PARIZAD was mentioning, people confuse TDS with their tax liability. So TDS is just an advance and an ad hoc deduction. So, I mean, there are clients who will say, we don't file tax returns because we don't need to file tax returns. And you ask them why you don't need to file tax returns. He says, from my salary, the TDS is being deducted. From whatever interest on bank FDs, my TDS is being deducted. So where is the question of any additional tax liability? So I think this is one thing, that just because tax is deducted at source does not mean you don't have to file returns.
Yeah.
You have to file the returns if your taxable income is more than 2.5 lakhs.
So, all right, Harsh, PARIZAD, I want to talk about housing in more detail as well in a bit, because it's very clear when you own one house, you live in it, then you're completely clear from the tax standpoint. But it starts getting a bit complicated when there is a second house and when whether it is let out or not let out, if there is any notional rental income. So let's start by understanding some of those aspects. What does the law say? What do I need to pay if I do own a second house, PARIZAD?
Yeah, so if you're fortunate enough to own more than one house property basically is treated as self-occupied and it's tax exempt, okay? More than one house, your second and subsequent house, if you're the owner, then it is actually, irrespective of whether if it's rented, then actual rental income, and you compute the provisions as per income from house property. Even if the second or subsequent houses are lying vacant, idle, which is not rented out actually, what very often people forget is that India has always had deeming provisions for taxation. So if the second and subsequent house, even if it's vacant, you impute or deem the rental value and it is subject to tax in your hands as a notional rent.
How is this deemed rental income computed? I mean, how is it arrived at if the house has not actually been let out?
So the onus is on you. So you either get a valuation done or a property in your neighborhood, if that is rented, what is the actual rental value. So basically it's a property in an equivalent neighborhood and how much rent it would command. That should be the deemed annual rental value.
Okay.
Yeah.
So, Harsh, in that case, what do you advise clients who do have the second house, and specifically in cases when the second house has not been let out, so there's actually no income generation from that particular asset? So, what's the advice there?
So it's very ironical because sometimes the very fact that the house is vacant, so you have to take the deemed rental into account. But because you treat it as deemed rented out, the interest that you might have paid on a loan that you had taken to acquire that house, the entire interest is treated as deductible, total, right? There is no limit. So people have this notion that the interest on home loans is deductible up to 2 lakhs. Now that is a figure for self-occupied property. There the rental is taken as nil and then the interest is allowed as a deduction, but the cap is 2 lakhs. So the maximum loss from a self-occupied property is 2 lakhs. But moment it is either an idle property, in which case you take a deemed rental, or an actually rented out property, the entire interest is allowed as a deduction. So just to, I mean, typically today the rental on residential houses is running at roughly 2%, right? Home loans are roughly say 10%, right? 10% on say 70% of the value, so roughly 7% of the capital value. So 2% is the rental value, 7% is the interest deduction. So you would always have a loss.
So we'll take a break on that note. We've gone over some of the income heads, but then there are several others remaining. There's of course capital gains. So in case you've been lucky enough to make certain capital gains, how is the tax treatment there? And of course for those who are self-employed, what are the things you need to keep in mind? Lots more coming up. Don't go away.